I want to call like 2026 the rebounding year, right?
Yes,
like
yes.
we are going to rebound. We had a negative absorption year in 2025. I don't remember that the last time that happened.
It's been a while.
Yeah. And I think that given your point about the tenant activity, specifically on the larger deals, we're going to have a really good first half of 2026. So that's a prediction of ours. Welcome to our Industrial Advisors podcast. You have Bill Condon, Matt McGregor. We're doing our 2025 review, and we'll jump into some of the numbers and recap the year. Don't love what the numbers say, but very excited about 2026. But let's start where we always do, and that's that kind of three dynamic factors and a prediction for what's going on.
That's right. So three dynamic factors wrapping up 2025. First would be, unfortunately, it's a negative, highest vacancy of our career. We'll get into the numbers, but we surpassed the highest vacancy in our career was kind of that 2010-11 timeframe before the market turned around and went on basically an 11-year run of reducing that. But this last quarter, unfortunately, we surpassed that. And then the second most dynamic thing is a big uptick in late Q4 and certainly rolling into this year, but certainly of big user activity. So there's about 5 million feet and a few, small handful of deals, 6-7 deals out there that would potentially occupy between purchases and leases about 5 million feet. And that's much needed.
Yeah, it'll help with absorption and the rebound of 2026.
That's right. And then, of course, the final thing, another positive is really, I would call it almost an epic interest in land. We're seeing unbelievable amount of offers. Given that we're the highest vacancy we've been in our career, you wouldn't think that's the case, but man, is there an interest in land, and we're closing land transactions?
Yeah, I think that's a good point. We've closed a lot. We also happen to have the best, in my opinion, right now, the best land site on the West Coast available for sale.
Sure.
It's big, it's in a fantastic location, and the offers are reflecting that.
Yeah.
From a number standpoint, but from a depth of offered standpoint as well.
Yes.
So what that tells me is belief in this market, right?
For sure.
And I don't
in a time that you would say their numbers may say don't believe.
That location's bulletproof.
Oh, I agree.
Yeah.
I'm just saying you and I were both
and it's
surprised.
Huge. Yeah, but how at the depth, really.
Not only on that site being the best site in the West Coast and maybe the best site available in the country from an industrial perspective, but you and I were both optimistically surprised about the volume of offers, and volume even on other stuff. We just sold the Arta site in South Seattle, right?
Yeah.
Shocking how many offers.
Yeah, site in Frederickson we had really good activity on. So I believe that, again, in the core areas of the market, land is back.
That's right. Land's back, baby.
And then from a prediction standpoint, I want to call like 2026 the rebounding year, right?
Yes,
we are going to rebound. We had a negative absorption year in 2025. I don't remember that the last time that happened.
It's been a while.
Yeah. And I think that given your point about the tenant activity, specifically on the larger deals, we're going to have a really good first half of 2026. So that's a prediction of ours.
Agreed?
Yeah.
Let's jump into the numbers.
Let's do it.
Let's start talking about overall vacancy. So we always bifurcate this between the entire market and then removing the north and east market, right? So the true valley. So the total market, including the north, is 9.3, unfortunately, and that's
percent vacant.
Yeah, percent vacant. That's up from 8.9 at the end of Q3. And then if you remove the north and east market and just talk about the valley south, unfortunately, it's 9.9, up from 9.2, so a big jump in the last quarter. And then the net absorption numbers, unfortunately, were negative, just under 1.6 million feet.
Yeah, and if you take just a quick dive into the submarkets, the Seattle close-in market's 9.3% vacant, Kent Valley's 9.4, so pretty close. Pierce County is actually 11.6. Part of that had to do with some new deliveries. That is where I think a lot of those bigger tenants will land, and so that should come down quite a bit. Thurston County is only 5.8, so that totals to about 9.9 overall vacancy rate. Under 10, under double digits.
Yeah, there you go. Positive lining of that.
Yeah.
And then the lowest vacancy continues to be that both the 10 to 25, and then that would be your lowest, and then 26, call it, to about 50,000 feet. Both of those in the mid 4 ranges. And then the highest continues to be both the 100 to 200 at about 12.2%, and then greater than 200 at 12.2, which has jumped considerably.
Yeah,
sorry,
the
12.9.
With the 1 to 200 is 12.9. The 200 plus is 12.2.
That's right.
So that is consistent with where the market's been. That 1 to 200 range has continued to struggle. It's gone up every quarter for probably the last 6 quarters. I don't have those numbers in front of me, but last quarter it was 12.7. It's now 12.9. So in a lot of that space is that kind of Class B commodity type space.
That's right. And I think it's easy to predict based on our earlier conversation that big box market greater than 200 jumped 120 basis points in 1 quarter because of deliveries.
Yeah.
It's going to collapse back down when some of these transactions and leases go through on the larger side, because you're going to all of a sudden lose a few million feet of that in that size range. So you're going to see a big drop off.
Yeah, those are the buildings that are going to lease.
That's right.
So that market will come down. I think that it's going to take some time in that 1 to 200 range to get back down into single digits, just given the amount of product that's actually there. So we'll keep a close eye on that.
Yeah, and then a couple of the newer deals to talk about. Really, the one I would just highlight, one of the larger ones, was the Red Dot building in Tukwila.
The old,
to a soccer club, which continues this pickleball, soccer, baseball. Like, it's kind of insane with the amount of deals we're seeing in that space.
Yeah, I think a couple things on that. We are seeing more of that kind of recreational type use for a couple of reasons. One, the vacancy's up, and so landlords are more open to doing those type of deals.
For sure, and lower credit.
But I will also say that all of those sports have become increasingly popular, which has led to better credit for those entities. If you remember 10 years ago, 15 years ago, if you got a call on one of those things, it was like, we're not doing that deal. Now you actually look at, we did a tennis deal earlier in the year for 125,000 feet. The credit was good, right? And so we went into a building, freestanding building, that was a good fit for that particular use. So why wouldn't you do that deal? But you're seeing the soccer deal, the same thing. They went into a Brookfield building that had been sitting vacant for a while. I don't know what their credit is. We didn't see, but I'm assuming it's, they're comfortable with it. So they do the deal.
Yeah.
And then, we're looking at doing a baseball deal right now.
And we did a tennis deal.
Yeah, and I know the baseball guys really well because I'm in that world, and that it's rock solid.
Yeah, it's different than it used to be, to your
Select
point.
Sports has pushed a lot of these recreational type uses into good credit entities.
Yeah, it used to be the single coach or some guy that had a little bit of money.
Yeah.
Wanted to go in and lease, and now you have actual organizations.
Correct, and you have financial partners behind it.
That's right. Yeah, and the demand is considerably up, to your point. We should run a study and just look at last year. Probably should have done it for this, but I'll bet there was an easy 1 million feet of sports deals.
Yeah. I would agree with that.
When you look at this
pickleball, tennis, soccer,
all that. I'll bet there was 1 million feet.
Well, there was 4 or 5 pickleball deals done.
Yeah,
so
interesting.
we talk a little bit about capital markets.
Capital markets, yeah.
Good year overall, I think, for capital markets. I think we've had, from a volume standpoint, our best year since 2022. So
it's an above average year if you just look at the last 10 years too.
Yeah. It's and we saw it. We saw it in the first part of the year last year as just, investors came back. They were selective about what they went after, but they were aggressive on the stuff that they wanted. So that was really good to see. So
about 8.4 million feet of transactions for just under 1.8 billion.
Yeah, 1.8 billion in 2025 sales volume. Yeah.
And $213 a foot was your price per square foot, down from last year. And so that continues to drop as lease rates obviously drop. But yeah, to your point, let's see, 1, 2, 3, 4. In the last 10 years, this was the 5th best year. And it's our best year, to your point, since 2022. It beats 2020, and it was just about on par with 19, which was a very good year. So I would say overall capital markets are back, probably just, with the exception of, vacancy.
Yeah, I think that there is starting to be more of a risk for vacancy if there's a story around it. right?
Yep.
We sold a building to an investor. It's a 130,000 square foot building in Kent, and it's been a single tenant building its whole life. That building's going to get chopped up to 5 or 6 different tenants. Really good approach for that particular market. So I think it depends. I think there is more of an appetite for vacancy today than there was even a year ago, if the building's well located and there's a story there.
That's right. And then the port is down about 3.5%. And it's interesting, for as high as the vacancy is, I feel like it's busy, but it's just because it doesn't feel like 2008, 9, and 10 that was just felt like nothing was going on.
Yeah, I mean, I think that the market feels better, a lot better than it did back then.
Yeah.
And it's so funny because momentum is in this business is just a really powerful thing. You start seeing a couple big deals get done, and then it's like all of a sudden those are getting done, but then that leads to the deals right below them, right? The 100 to 200 start to transact. And so I think it's going to set the pace for the market, getting a couple of these bigger deals done. And that'll also impact investor demand, right? Even more, right? So I like where we're heading and into kind of a recovery year in 2026.
Prediction, the last and most important prediction is Super Bowl. I know what you're going to say.
Yeah. Well, I was fortunate enough to bet the Seahawks.
Both of us.
Yes. Plus, I don't think you could have better odds. Plus 6,600.
Yeah, yours was better than mine.
Yeah, so 100 pays you 6,600. I believe in the Hawks. The Hawks are going to go to the Super Bowl. Hawks are going to win the Super Bowl. I don't know who they're going to play. Maybe Buffalo. If Josh Allen, I mean, he's the best football player in the world.
That's a big prediction.
Their defense isn't very good, but man, that guy is so good. I don't know, man. I think I put my money on him out of the AFC. Or surprise team could be the Chargers.
Yeah.
Out of the AFC.
Yeah, that would be interesting.
We'll see.
For sure. Yeah, my prediction is we win the Super Bowl unless we have to play the Rams.
We're probably going to see them again.
That would suck.
Nah, we're a better team. We're just better than everybody. So there you go. 25 is wrapped up. Really excited about where we're heading in 2026. I think it's going to be a really good year across the board, and the momentum will just carry forward each quarter.
Last prediction, vacancy goes from 9.9 to, by the end of the year?
7.6.
I would, that sounds like a good prediction. I would agree, somewhere in the mid sevens.
Yeah, and we'll be back in the 3% range in like 2 years. So
That's right.
We'll see what happens.
All right. Thank you. Happy New Year.